Are rates going up in November? Fed Chair Jerome Powell hints maybe not. Before we begin, remember to like this video and subscribe for more economic updates. I am Devlyn Steele, Director of Education at Augusta Precious Metals, wrapping up this week's economic developments, including Powell's suggestion that rising bond yields might replace a November rate hike. When asked directly if rising bond yields might mean the Fed doesn't have to raise rates as much, Powell responded, quote, "It could." According to the CME Group's FedWatch tool, which assesses the probabilities of changes to the Fed funds rate, the expectation that policymakers will leave rates unchanged has soared in the last 30 days from 70% to 99%. On Tuesday, the National Association of Home Builders reported that its housing market index, which gauges home builder sentiment, fell in October for the third straight month, dropping to 40 from a downwardly revised 44 in September. Home builder confidence is now at its lowest level since January, due largely to higher interest rates. Data that appears to contradict the slump in home builder sentiment was released on Wednesday by the Commerce Department. According to the numbers, housing starts soared 7% last month to an annual rate of 1.36 million units. The September surge follows a decline in housing starts by 1.5% in August. Analysts think the big increase in housing starts is due to the approval of building permits before mortgage rates recently jumped above 7%. They add that it's likely we'll see construction activity slow down in the months ahead. Rounding out the housing market data for the week was the figure for existing home sales in September from the National Association of Realtors. And in this case, the recent surge in mortgage rates does appear to be reflected clearly in the numbers. Sales tumbled 2% on a monthly basis from August to a seasonally adjusted annual rate of 3.96 million units. Notably, it's the first time sales of existing homes fell below 4 million units since October 2010. Year-over-year sales of existing homes dropped 15.4%. Finally this week, another month, another decline in the Conference Board's leading economic index. The index fell 0.7 of a point in September to a reading of 104.6. The September decline was bigger than that projected by economists, who were looking for the index to drop by 0.4 of a point. The leading economic index now has fallen for 18 straight months. In the midst of economic uncertainties, will November bring relief or more turbulence? Only time will tell. This is Devlyn Steele for Augusta Precious Metals, signing out.